Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Bank of Jiujiang Co Limited annual report. Bank of Jiujiang Co Limited offers a wide range of banking services to various clients. For corporate customers, the bank provides loans, trade financing, deposit products, and other intermediary services such as bill acceptance and discounting, letters of credit and guarantee, and insurance agency. In addition to corporate services, the bank also caters to individual customers with personal loans, card services, and wealth management services. The company's financial market business segment includes money market or repurchase transactions, financial investments, and securities investment funds. The bank provides domestic and overseas settlements, interbank placement, and government bonds trading. It also issues financial bonds, acts as an agent for government bond issuance and settlement, and underwrites government bonds. Furthermore, the bank offers SafeBox services and conducts inward and outward payments on behalf of its clients. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline in a financial institution can be attributed to several key factors. Firstly, fee and commission income plays a significant role in determining revenue growth or decline. An increase in this type of income can contribute positively to revenue, while a decrease can have the opposite effect. Another important factor is net interest income, NII, which saw an increase of 6.3% in recent times. This indicates that the institution's interest-earning assets are performing well, contributing to overall revenue growth. However, there are also areas where revenue decline has been observed. Specifically, interest income from loans and advances to customers has decreased across various categories. Corporate loans and advances saw a decline of 1.7%, while retail loans and advances experienced an even more significant drop of 21.2%. Additionally, discounted bills recorded a decrease of 8.6% in interest income. These declines indicate that the institution's lending activities may be experiencing some challenges, contributing to revenue decline. The net income of the company decreased by RMB 79 million, or 10.4% in 2025 compared to 2024, resulting in a net income of RMB 841 million. This decline can be attributed to several factors affecting profit margins. One key reason for the decrease is the downward trend of macro market interest rates, which has led to a decrease in average yield of interest-earning assets. Additionally, the company's loans and advances to customers have become less profitable due to national policies aimed at reducing fees and making interest concessions. These changes have resulted in lower net interest margins, with a 1.75% decrease from 2024. Furthermore, the operating income margin has also decreased, dropping from 99.6% to 98.8%. This decline is partly due to a decrease in net fee and commission income to operating income, which fell by 5.52% compared to 2024. Overall, these factors have contributed to a decline in profit margins, leading to the decrease in net income. The company's financial performance indicates a concerning trend in its operating cash flow. According to the provided data, the company has experienced negative operating cash flows for both 2024 and 2025. Specifically, the values for these years were minus 3,169,443 RMB and minus 24,078,585 RMB respectively. This suggests that the company is not generating sufficient revenue to cover its operational expenses, resulting in a net outflow of cash from its core business activities. The company's debt level has undergone significant changes over the past year. While total debt increased by 10.3% from $474,811,770 to $523,434,559, long-term debt decreased by 2.7%. This indicates that the company has taken on more short-term debt, which increased by 7.8%, resulting in a net increase in total liabilities of only 0.2%. In terms of interest expenses, there are mixed signals. External interest expense decreased by RMB 1,627,966 and RMB 7,077,562, indicating a reduction in borrowing costs. However, interest income increased by a mere RMB 3938, suggesting that the company's investments may not be generating sufficient returns to offset its interest expenses. Furthermore, accrued interest on deposits from banks and other financial institutions decreased by 85.1%, which could indicate more efficient use of funds or reduced borrowing. The inconsistencies in reporting changes in debt level and interest expenses across different pages highlight the need for careful review of the original financial statements and supporting documentation to ensure accuracy and consistency in reporting. Management is optimistic about the company's prospects, attributing stable performance to effective risk management and strategic initiatives. The bank aims to maintain its strong market position through efficient management of assets and liabilities, focusing on optimizing business structure, deepening scenario ecosystem, and strengthening technological risk control. The company will continue to prioritize serving the real economy and high-quality development, with a focus on asset quality control and strengthened credit allocation. Management is committed to building a strong corporate culture, creating maximum value for customers and optimal positions for employees, while also strengthening its risk management system. Key strategies include increasing net interest income, growing fee and commission income, expanding operating income, reducing impairment losses on assets, and investing in non-current assets. The company has also shifted its investment strategy, reducing financial investments at FVTPL and increasing customer deposits. Additionally, the bank is exploring expansion through mergers and acquisitions, as evidenced by the absorption of 3 subsidiaries into branches. Overall, management's outlook emphasizes a focus on long-term growth, risk management, and strategic initiatives to drive business expansion and maintain market leadership. The company has a history of paying out dividends to its shareholders. In 2024, the final dividend was set at RMB 0.57 per 10 shares, totaling RMB 162.3 million. This payout is reflected in various sections of the report, including pages 130 and 156, which confirm that dividends were paid to ordinary shareholders, amounting to RMB 162,300. Furthermore, page 195 explicitly states that dividends were paid out in 2024, with a total value of RMB 162,300. That concludes the financial summary for Bank of Jiujiang Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.